Let's talk about the outlook for the markets as we go into this important weekend of trade talks. Joining us this morning, Interactive Brokers Chief Strategist Steve Sosnick. Steve, happy Friday. Good to see you again.
Great to see you, Carl. Happy Friday to you.
So what do you think's on the line for Monday, given the headlines that we either expect or hope to get over the weekend?
You know, normally I'd say we've already started to price in some good news, but I think right now we've been in such a momentum-based rally that any piece of news that sounds even remotely decent is being taken as a positive. I mean, you know, as the prior conversation said, is 80% good? When I guess it is compared to 145. It also makes you wonder why we're sort of, you know, giving a different negotiating play right ahead of the meeting. So maybe that means there's some more room to come down. But basically, the market right now is just poised to accept any piece of good news on the tariff front as a reason to rally. Whether or not objectively it really makes a big difference, as we saw, let's say, from the UK tariffs yesterday, which wasn't a big change in the status quo, but was still taken as a positive.
Right. Do you believe that tech, let's strip out chips, for example, just given some of the export restriction diffusion rule stuff, but does AI and tech seem to you like a safe place to hide?
As long as the valuations don't run away, it can be, because you remember, number one, they're basically service-based, and the tariffs are typically focusing on goods, not services. So with semis, of course, are actual physical products, and that's, as you said, let's leave those aside. But some of the ones that are software and service-based, they're not as exposed to the tariff threats. And also, as the world is moving toward ever-increasing automation, ever-increasing use of AI, as long as the valuations don't get run away, which I think they're not quite there yet, it might actually be a little bit safer than some of the countries that are more initially dependent upon tariff negotiations.
You think that momentum trading is back in the market with less of a focus from investors on fundamentals. This is what I see in the producer note here. How long does that last to the upside, do you think? And is there a risk that momentum reverses to the downside in a pretty voracious way?
Well, Leslie, the answer, I do strongly believe that we're in a momentum-driven market. Momentum can take you a long way, but it can also reverse in a very nasty way, as we saw earlier this year. You know, the reason I make that comment that momentum means you're not really paying attention to fundamentals is this: if you are momentum trading, you are basically saying that, you know, the trend is your friend, and basically the price action is what's driving you, and that induces you to continue to follow buying rallies and even chasing them if need be. And when you start doing that, if you're just looking at price action, you're not looking at what's underneath the hood. And that only works up to a point, but it can go a long time. I actually was checking through some old notes, and we're not at what I would call the nihilist levels of momentum chasing, which I first used that term, actually, I found out February of 2020. But we're not there now, but I do think right now we're so focused on just trend following. We're seeing so many algorithmic strategies that use trend following. We're just seeing human beings doing it. It's in many ways the simplest and easiest way to invest and trade. But at some point they do get dislodged. They can get dislodged from fundamentals, and that's when you start to worry.
Finally, Steve, I know you've done some work looking at non-U.S. investors and how they're viewing our markets, given some of the various day parts. Are you getting the sense that they are becoming less aggressive sellers?
They are becoming less aggressive sellers, but they are still not the main buyers. We're seeing a lot more activity during U.S. hours than overnight hours. And just look at the action we see. You know, today is a good example. We basically saw as the U.S. investors woke up, that's when the futures woke up. And we're seeing during the day session, markets rally much more, you know, ahead of where they come in the pre-markets in many cases. That's telling me that it's U.S. investors buying. Foreigners may not be aggressively selling quite so much anymore. I think they're still not really net buying. They may not be net selling to the degree they were, but the activity is basically, it's U.S. based. It's U.S. investors showing faith in U.S. stocks. Whereas for much of the last few years, it's been global investors, U.S. and international investors, showing faith in U.S. based assets.
Right. That's an important trend to watch, too. Steve, good weekend. We'll be glued to our phones, I'm sure. Talk soon.